Good morning, welcome to Morning Outlook. This is Kim speaking on Wednesday the 4th of March. So starting off looking at the euro dollar, and well, the extreme or rather sharp rise here may be coming to a temporary end, although I'm looking at the order book and there's suggestions that there's buy orders sitting just above, although it's then obviously the big area of buy orders are sitting up here above these prior highs. So we have got some divergence on this 4-hourly time frame as I'm looking at it here, which could suggest a bit of softening. The thing is, the Fed have cut their base rate by 0.5%. That's the biggest rate cut they've made since back in the days of particularly a special one since back in the days of the financial crisis. Now they've cut theirs. Who else can cut? The Aussies have cut 0.25%. Europe have got a bit of a problem here. I wonder if anyone's really picking up on that. They have very little stimulus. I don't even think the 0.5% cut's going to do a lot of good anyway. But they've got very little stimulus left, and someone may wake up and work that out soon, and we may see the euro selling off. But at the moment, it's well, as I say, showing some weak signs. It has, yesterday broke my trend line nicely on a bit of news. May see a similar sort of trend line tester running through again today, and it may be worth watching for that to see if that happens for the upside. I would be putting it across these two further points as opposed to putting it too tightly, although as I said, there are some buy orders quite tightly behind price at the moment, which may just draw price back up there at least for a pip, but I think it'd be safer having it that bit further away. We saw yesterday the further distance there, they tested 3 times beyond the original tests there. So we'll see what happens. If it starts breaking down though, broke beyond that 60-minute 50 with the S1, maybe even more could be in line for the downside. Okay, the pound never really saw the same sort of benefits as the euro in real terms. It's chopping along here. The 4-hourly picture really showing us it in clearer detail. Just range bound really at this stage, and it does look like there's further potential for a push back down. Okay, I've had to just change this to a 30-minute chart, my 60-minute feed. For some reason, across any of the pound currencies, doesn't seem to want to be working. So, okay, so what we've got here, and looks like on this pound, it's broken this upward trend here that was forming through yesterday. And that's broken, as I say, this morning, and looks pretty weak at the moment. For the upside, well, let's just have a look and tighten this up a little bit more so I can see what's going on. It's not that I can see too much here. A break of that upper trend line may see me getting a little bit more bullish, although I'm very wary of that, and I'm really looking for possible retracements, although the pound is just falling out of favour with me at the moment with the volatility it's had recently, the lack of any logic in it at times. So we'll see. It may still have opportunities there, but okay. Dollar yen, let's come back out, and the dollar yen, well, it's yesterday as risk is off again. It's we've seen the sort of the strength of the yen improve there, but it's extraordinary times as we sit and look at these markets, and we'll probably look back just as we did with the financial crashes and things like this and say, well, do you remember when? But we're seeing some weird old things here. As I said yesterday, the yen remains one of the weaker pairs in real terms, in terms of economic wise, but that's making little difference to what we're seeing at the moment, and we're seeing money running into it. Just looking at where we are here, it looks like it may be rolling over for another, potentially just breaking this trend line that's running up here and maybe rolling back down towards those lows again, towards that key 107 area. Okay, Aussie dollar. Aussie dollar, lower highs, lower lows through the days, and I mean, again, yesterday benefited pretty well from the action there until people probably look at it again. But it is holding up pretty well, the Aussie dollar at the moment, and as I say, here we've got lower high lows, high highs coming through. Which we can, there we go, see here on the 4 hours, but a bit messy as we stand, and a bit thinner now. The actual momentum is coming away from this. The smaller bars, which suggest the momentum is coming away, but it has. I'm just looking here. Actually, a break of the more recent low here would confirm a lower high coming through, and we'd start seeing potentially as a trend line that could be drawn across the lows here. This too, anything breaking below that may see it soften a little bit more. Okay, let's see if I can put a 60 on there. Nope, doesn't really want it. So I've got a bit of problem with the charts this morning. Okay, Canadian dollar. Canadian dollar, well, I've steered clear of this. Yesterday it still ended up in an update, so softening of the Canadian dollar further, and I'm running out. Can't really show you too much else because look, my charts are just dying on me. So on that basis, I should cut it there. Just looking at key news today that's running through here. We got midday then. We've got GDP. We see Aussie GDP come in better than expected. And Chinese data was really soft, which with all this soft Chinese data, it's going to have a knock-on effect around the world, particularly to suppliers such as Australia. We got the final services PMI coming in today, which we are still seeing a bit of volatility on these figures. They're now released in the flash figure, and then the final figures. The final figures are still slightly out and may give us a bit of volatility there on the pound. Then we wait for 115. We've got the ADP non-farms, that they have a lesser degree of logic or volatility around those generally. But we do have something that may move the markets a little bit there. We'll see what the Canadians do, because there's a Bank of Canada rate statement, an overnight rate. I would suggest they're going to cut it by 0.5%, because that's what it says on Forex Factory, so I'm not going to disagree with them. I think they may well do that, do that same 0.5%. It would be a shocker if they were to cut any more though, and that may be the factor if the Canadian dollar does move further. But they are at 1.75 at the moment. They are one of the higher interest rates out there. They could afford to take 1% off and still be higher than most. There we are. Have a great one. Bye for now.